we are just hours away from a key moment in Canada. Weed will be legalized across the land of our neighbor to the north. But check out the move in pot stocks today. Kronos, Canopy, Tilray, Aurora, all getting hit. So will the event in Canada end up being a sell the news event? Looks like it, Tim. What do you think?
I think you have a lot of different dynamics. The Canadian LPs, the big integrated companies up there, are not cheap on any multiple. There are some that are cheaper than others. Obviously, I don't think we know the global total addressable market. That's one of the things that I think the bulls are going to say. You have no idea what consumption trends are and where this ultimately goes. What's really happening right now, if you look at the market today, those big LPs sold off hard. Then names like MedMen was higher. Charlotte's Web was higher. So U.S. over Canada is the trade right now. Old school versus new school. U.S. valuations are significantly cheaper, and this is a function of the capital markets. This is not necessarily where are better companies being made. Bottom line here, the industry is starting to split and become more sophisticated. What I mean by that, Pfizer, if they're coming in this industry, they're totally different than Diageo or totally different than, God forbid, Procter & Gamble. The point is these verticals are taking shape, and this market, it needs to take a breath. And so it wouldn't be a surprise that you sell the news, but you can't paint every stock with the same brush right now. And fortunately, even today's price action, you saw which companies are actually the newer flavors of the month, significantly outperforming.
All right. Well, our next guest says pot stocks are simply too pricey here. Let's welcome back the Dean of Valuation, Aswath Damodaran, the finance professor at NYU. Professor, thanks so much for joining us once again. I read your latest blog on the valuation of these stocks, and it sounds like you're extremely skeptical about this whole space.
I think that there is a basis for the pricing, which is that the market's going to be big. I think we can concede that it's going to be a big market. The problem I have with any of these companies is none of them are compelling enough stories. And that's all you have right now. The numbers are not there. You're buying a story. None of the companies that I see out there are compelling enough stories that I would jump onto that story and say, that's what I'm going to ride to make money on this market.
So when you take a look at the potential uses when it comes to medical, when it comes to recreational, when it comes to nutraceuticals, consumer products, et cetera, it's just simply too early to say the potential market for each of these sectors is X, and that means this company should be valued at Y?
I think it's not too early to make a judgment about the overall market, especially on the medical side. I think it's a little too early to decide which of the companies that's out there, if any of them, is going to be the company that benefits from that trend. Because let's face it, there are going to be more companies coming into the space, and they don't have to be pot companies. Many conventional companies are going to jump into this business as we go along. One reason I think U.S. companies have held back is because of the fact that you have this two-level regulation. One at the state level, where 9 states allow it for recreational purposes, and one at the federal level. Until we resolve that, U.S. companies are going to be handicapped.
Okay, so you're saying right now not to buy even the ETF. And also, the companies that are related to pot but may not be a direct pot stock, such as a GW Pharma and a Scott's Miracle-Gro, they have been swept up in this whole pot mania. You don't like those either.
But I'm closer to buying those than I would to be buying pot stocks. I think Scott Miracle-Gro 20% lower. I'd be inclined to add it to my portfolio. It's a small play, but it's still a much more promising play for me.
It's Karen, let me ask you something. I read your piece, which I thought was great, by the way. You talk about perhaps some disappointment in if more states legalize pot, that actually it won't grow as quickly as the market might think. Can you talk a little bit more about that?
I'm speaking from the experience of being in California, where pot was legalized on January 1st of 2018. And what people have been noticing in this market is that the illegal market continues to exist, partly because legal weed is so much more expensive than illegal weed here. So I have a feeling that those people are expecting the minute that weed is legalized, that the illegal market will cease to exist, are really not, they're missing the point. I think this is going to be a market where it's going to be a slow battle to win the market, even if it's legalized.
So when you see a Canopy, as Constellation Brands investing an additional $4 billion in a company like Canopy Growth, what does that say anything about Constellation Brands in terms of their valuation or maybe where their stock should be trading?
In fact, if you think about it, tobacco and alcohol stocks, companies are perhaps best suited to get into the space, especially the recreational space. Partly because they know this business. They've been regulated. They've been selling essentially the equivalent of sin products So they're actually well suited to enter this area. And I would expect more entry into this space if, in fact, the laws and regulations start to ease up.
So, Aswath, just last question here. I mean, let's say these stocks across the board were cut in half. It sounds almost like there's no real way of pinning that valuation because the potential is so unquantifiable at this point that it's very difficult to put any valuation on a stock.
And it's a trading game right now, and this is not uncommon, right? Early in a business, it's all about the pricing, which means you're going to it's going to be built on mood and momentum and incremental information, and trivial pieces of news are going to move the stock all over the place. So if you're an investor, you're going to have a strong stomach to stick through this market. But I think there will be a time when, in fact, you will be able to get into the market. My suggestion is to stay out for the moment.
All right. Aswath, thanks so much for your time. We always appreciate your analysis. Aswath Damodaran, a professor at NYU. Before you get a final word on this, I just want to note that Tim Seymour is all in on this space. He's long a number of names, also sits on advisory boards for 3 cannabis stocks. And for all of Tim's disclosures, you can go to fast.cnbc.com. So
sounds like one of those arthritis commercials.
Yes, it really does.
Not easy to do.
Scroll up above me. You should play soft music. His point is an interesting one.
My question is, why can we say that Tesla has a first mover advantage and Netflix has a first mover advantage and not care about their valuations? When we argue that actually it's about a land grab, it's about going out there.
But then why don't you like Tesla? I mean, if you can suspend the valuation argument for pot, why not Tesla?
Here's why. Because I actually think that, first of all, Tesla has enormous competitive forces around it. I think Tesla can't. I don't think they can ramp up. I think they have operational challenges. I think there's fantastic operators in the cannabis space that are proving they're making money in an environment where they were not banked, where they had everything going against them. And I think actually that's what's
Is it the
fascinating.
same, though, when you take a look at a Tilray versus an Aurora versus a Canopy for the other producers who you know, it's about cost of production per ounce, right? Something like that. I mean, when it comes down to it. And so why isn't that competition the same that Tesla's facing from BMW and Mercedes? I mean, I'm not
There's a lot of competition.
It's not only cost. It's not only cost per ounce, it's cost per gram, but the problem is the potency. So you can argue. I think
it's not about pricing, though. Brands are being built.
Tim, I'm taking your side. I'm taking your side.
Keep talking.
I'm taking your side. What the problem is, it's not about the cost per gram. It's about the potency. So you could have one that's a cheaper cost, but doesn't have as much THC as the next one. It's the wrong metrics to look at it.
Okay, that's fine. Then I can say, oh, you know, Tesla's performance is better, the charge is longer, et cetera. I mean, there are all a million ways to slice and dice this, but the bottom line is they're both story stocks, and to some extent you have to suspend the rigor when it comes to valuation to believe in these companies, no?
I'm saying I think a lot of these companies are extremely expensive. I said that from day one.
Right.
I'm also saying that I think this is no different than people throwing all their money at Tesla and Netflix when I think those valuations are tough to justify. That's what I'm saying.